banks have now decided to pass on any rate cut through the MCLR reduction to benefit all borrowers. It's a decision which the banks have made. Reduced EMI for housing loans, vehicles and other retail loans by directly linking repo rate to the interest rates. Online tracking of loan applications by customers of retail, MSME, housing, vehicle, working capital, limit enhancements, all of this will be covered. They can track it themselves online.
Good evening, good to have you with us on this Friday edition of the Urban Debate. And the government seems to have heard the SOS that was being sent over the slowdown in the economy. And if we have to believe the government and the finance minister, this was just part one, where some announcements have been made. There will be more in the coming weeks. An acknowledgement that yes, there is a big concern in our economy today, and if immediate steps are not taken, things could get worse. Now, the big demands, mostly prompted by the noisy markets and industry, many of them who in CEA's own words have been crying about pain. Whatever their demands were, some of those have been heard and reacted upon. Others, perhaps in the coming weeks, we don't know. But in case you missed that big announcement, here are the key takeaways, what Nirmala Sitharaman said. Point number one, headline number one, banks to pass the rate cuts to all segments. Finance Minister was very, very clear that the banks have agreed that they will pass on any rate changes that the Reserve Bank of India makes to ensure that the borrowers actually feel the impact as well. Headline number two, which essentially means that homes and car loans will get cheaper, keeping in mind the Reserve Bank of India in the last few times has consistently cut the repo rates. Headline number three, additional surcharge on capital gains now stands withdrawn. This was one of the biggest pain points ever since the announcement was made in the budget. And since then, markets, investors, who's who of India Inc. had been extremely upset that this tax was being levied, the additional tax was being levied, that has now been done away with. Finance Minister promised that the GST structure will be further simplified, so there is some relief that can be expected as far as the tax structure itself is concerned. Angel tax, as it is known as, which is the tax which is put on investment that startups, that new small businesses and entrepreneurs get. There's been a lot of controversy over it. It now seems that the government is intent and committed to doing away with that. They've also said that a series of steps will be taken to end tax harassment. Now, this is a big one, viewers. Tax terror, as some call it, tax harassment. That happens when there is assessment of your returns is a big issue in our country, and the government says they will take steps, they have implemented some to ensure that that doesn't happen. Corporate social responsibility, there were some changes that were announced during the budget that created ripples again in India Inc. Finance Minister today said that they will not have any criminal action if the corporate social responsibility targets are not really met. So these are the main headlines that have actually come across. But let's talk about what this really means for you. What is it for the consumer over here? Like I said, your home loans can get cheaper. Your car loans, vehicle loans could also reduce. The government has decided that they're going to simplify the online loan application format, that you will be able to track your loan application at every step so that you don't have to run around back and forth figuring out what the status is. That again, even for personal income tax harassment will reduce. They will make the whole process simpler. In fact, in the budget they had announced that the entire setup will be digital to ensure that there is no middleman, there is no taxman who can actually come and harass you. And today the finance minister has said that by October that will become a reality. And if you end up buying a car as per the BS4 norms before March 2020, then that becomes more lucrative. You can actually use it right till the end of the registration period. Those are some of the things. Let's get our experts in to try and help us understand what this really means for the consumer. For the next 1 hour, we are going to talk about you, the consumer, and if this will actually help you in any way. What more can the government do in the coming days? Dr. Brinda Jagirdar, senior economist, joining us this evening from Mumbai. Professor Abhijit Banerjee, a professor of economics at MIT, also with us. With me in the studios, Mr. R.R. Chaturvedi, CMD of the Shripati Group. Said Zafar Islam, spokesperson of the BJP. Sumantra Barua, executive editor of the Autocar, also joining us this evening. And Dhirendra Kumar, CEO of Value Research. Dhirendra, good evening to you. Let's start with you. If you can help us understand, as a taxpayer, as a consumer, what did Nirmala Sitharaman's announcement really mean?
I think, if I have to summarize it, primarily some of the immediate addressable, the low-hanging fruit in terms of what was causing has caused great anxiety in the market, that has definitely been clearly addressed. And it is quite, and the gesture by the finance minister that here is a friendly government which will be conscious of that, reinforcing that wealth creators need to be honored and they are valued. That part, I think the tangible thing is, linking the borrowing rates to a lot of clarification. And as said, this was just part one of the three. So, clarification of BS4, the faceless scrutiny, which is, I think, quite significant for the businesses, refund of the GST in a timely manner. So all these announcements were very high on nuts and bolts, because we have come across such events or such briefings very high on rhetoric, but very low on how exactly it will be done. This was very high on how exactly things will be done, how things will actually be addressed, and so that was very unusual. That was quite refreshing.
Okay, so in fact, much has been spoken about this whole tax terrorism, tax harassment, and that is something that was addressed in the budget. And after that, Prime Minister has come out and spoken about it. Many top ministers have spoken about it. But one will actually have to wait and watch how that part pans out. But Brinda Jagirdar, what I found extremely interesting was that here is the finance minister who's telling us that from now on, if there is a repo rate cut, if there is a change in the interest policy, that will be passed on to all segments. The banks seem to have decided that.
Absolutely. I think the biggest takeaway for me is the boost to sentiment that the budget has that the finance minister's announcement has given, and the boost to liquidity, and of course the big push to demand, which comes from banks being ready to pass on the rate cuts to the MCL, link it to the MCLR, and immediately give it to all borrowers. Remember, all borrowers, not just the new borrowers who will gain. And by doing away with the surcharge on FPI and the making CSR not a criminal, shortfall in CSR not a criminal offense, the finance minister has really given a big push to sentiment. And now the demand which has been lacking, we've been all talking about how demand is lacking in the economy. So this has again got a big push, I would say, from the finance minister, making the banks lend more, making the markets also, the bond markets, increase money flowing through them, to the MSMEs, through the auto sector, giving a boost to consumer demand, helping them by making auto loans, home loans cheaper. So all this will definitely have a big boost, not only for sentiment, but also for demand in the economy, which is the imperative today. And also liquidity, which is stuck. The finance minister has said that more than 30,000 crores which are pending, which from the government side, which needs to be released to the suppliers. Correct. This will happen. And for the small, the MSME sector also, it will be easier for them to get. So all these measures, I think, they may be small, but it adds up to a huge, big positive for the economy.
Yes, absolutely. So let's take it, few of the industries that were hoping for some specific announcements. Now, I must point out, like the finance minister said, there is more to come. But let's talk about what's been announced today. And Mr. R.R. Chaturvedi is with me in the studios. There was a series of demands. In fact, finance minister also met industry representatives. She heard them out to understand what their problems were, and so solutions can be done. What is your own reading of what was said today?
As I told you earlier, there are two parts of it. One is the state government who has to give a booster to the local developer, and second is the central government who has to look after the boost to the real estate sector. Luckily, our state government has given a big boost here. About 3 days before, they had come out with a policy that is a direct benefit policy. As in real estate sector, we have to see two parts of it. One is a direct benefit and second is a indirect benefit. In direct benefit, the state government has cut down the premiums, which developers were really happy about it, and they are planning to pass it on to the consumers as well directly. In some areas, that will give a cut down of almost 1,000 rupees a square feet in the rate what is prevailing today. That is a big boost for any consumer today.
Okay.
Number two, as far as the central government goes, they have also tried to give a boost by relating the repo rate to the MCLR. But first, the bank has to come to the reality part of it. Because the repo rate has been being cut for 2 years now, and bank has not been giving the benefit directly to the customers till now. So they have to reach that level. Today, what the government has brought the repo rate first. Immediately, the bank has to come down to that repo rate. Number two, for over and above the MCLR, they have been adding some percentage for while lending the amount. Somewhere they are lending 2%, 2.5%, 3%, 4%. That also should be rationalized. So once you rationalize that, the lending rate would come under control. Today, any bank, if you see, they are lending at a rate of 12 to 14%, which is the highest lending rate today anywhere if you see in the world. This lending rate can be controlled if it is linked up with the repo rate with minimum increment in the addition of the benchmark.
So, which is the new product she
Which is
announced.
the new product today. Correct.
Okay.
So in MSME, SME, all these people are suffering today only because the banks, they keep on adding the charges. They link up the repo rate to the MCLR. Again they say, no, we have to add 3% as our charges or 4% as our charges. That is not correct. The government should look into that part of it and say that has to be brought under control. Number three, the direct benefit what government has given is the long-term capital gain.
Yes.
Now, as they have given the capital market, they should consider for the real estate sector also. Naturally, when government has said they have number of measures to come back again, we have been seeing these type of measures, stimulation measures in 2008, when we had a similar situation, where government came out with measures in stages, slowly, after looking at the reaction. It is natural of it. Nobody would give you all benefits in one go. They would go in stages.
Okay.
So we have to wait and see.
So let me ask you this, from what has been announced, and a lot of it is to enable the consumer, the home buyer, to come and buy the house, to enable them to have some money to buy the house. What about the real estate sector? What about the developers and the builders? What more should the government be saying in the next announcement?
The basic announcement should be to create a liquidity in the sector. That is very important. Today, I would say more than 70% developers have become NPA. There has to be a rollover on NPA, some restructuring sort of thing. Till you do that, all the measures what we take will remain on paper. The government has to consider whatever the builders have become NPA, but one thing is very clear, any developer who is becoming NPA also, wealth-wise and debt ratio is much better. No developer has become a bankrupt developer anytime. There may be a cash flow issue temporary because of the policies, because of the system-based policy. All developers are wealthier today. Only issue is the cash flow. So government should look into it, allow them to roll over the NPAs, which will help them to generate more liquidity. And banks and institutions should be told that they should be little liberal for the developers who are wealthy enough and who have a good debt ratio completely. As far as the wealth is concerned, if they are comfortable, they should get the liquidity. They should not be hold on for the technicalities that you have become NPA. you have done this, you are into FME2, you are into FME3, FME1. All these issues practically have arrived because of the liquidity and the system-based market conditions.
Okay, let's go by one. And Mr. Zafar Islam, I'll get a response from you in just a bit about what Mr. Chaturvedi was saying. But Shumanta Barua, let me come to you first. We have you for a very limited time. Auto sector, the other sector that's been in a lot of pain. Sales have been month after month dropping. With the announcements that were made today for BS4, standard vehicles, as well as the other announcements with government buying more cars, a scrapping policy, and cheaper car loans, do you think this will in some way help the sector?
Tanvi, first of all, what the FM has done with today's announcement is actually earned the kind of confidence of the automotive industry captains, who I'm sure are heaving a sigh of relief after hearing the announcements. And what it will necessarily see, if I were to list down the three key factors which were affecting the slowdown, one was the weak economic sentiment and lack of finance credit crunch in the market, as well as rising transaction cost of vehicles, primarily because of new regulations coming in, which were actually forcing which were adding to the cost of producing a vehicle, and manufacturers beyond a point have no choice but to pass it on. So, and all these too many factors coming into play at the same time actually made the current situation much more challenging for the industry. With today's announcement, the sentiment, at least sentiment part, will become positive, and also the clarification regarding the BS4 registration, things like that. That is a big positive, I think, and especially as we are, and it also, mind you, it comes just before we enter the festive season of this year.
Correct.
If I'm not wrong, 1st September is Onam in Kerala.
Correct.
And the 2nd September is Ganesh Chaturthi in Maharashtra. Yes, parts of these states are flood hit, but nonetheless, what will happen? People who have been deferring the buying of purchase of an automobile will now not defer anymore, and will kind of enter the showrooms which they were shying away from, provided the banks and kind of pass on, lower the interest rate for loans as is expected now. So these are the key factors. But having said that, what I would have liked to see is things like some steps, some announcements, which will really, without any further financial burden to the government, would help the industry. Primarily, not only help the industry, but also the primary problem of worsening air quality. Like, for example, filtering out the BS0, BS1, BS2 vehicles, because they are major contributors to the pollution of the country. And one is that with such a step, it will not only weed out those vehicles, but will also help the industry grow better without, as I said, any financial burden to the government. As well as the scrappage policy, that should, I think, should be brought into effect as soon as possible, so that there is the automotive industry, which I'm sure you know is a major contributor to the manufacturing GDP of the country, for about 48% or 49% or so, and to about 6-7% of the overall GDP. So automotive industry, which includes the retail part, which is the dealers,
yes,
where we have seen a lot of job losses since April to July in lakhs, that number goes into lakhs. So those sectors will now kind of see this as a very positive move. So overall positive move, but yes, we would expect some more. But as I think, if I'm not wrong, I didn't hear the FM, but I think she said
yes,
that there will be some more.
Yes, she said.
So
I think there will be two more rounds, Shuma, two more rounds of announcements, yes, that are still to come. And perhaps more for the industry in that as well. But like you said, and I completely agree with you, this was needed right now, at least to send out a message, at least to boost the sentiment, to say, yes, we are listening to you. We understand that, yes, there is a problem, yes, and we are willing to actually, work with you to fix this problem. So here is part one. Let's then together look at what else can be done.
I think the FM has very clearly conveyed that.
Yes, absolutely. So before I go across to Professor Banerjee, let me get Zafar Islam in. Zafar Islam, is that reading correct? Is that what the idea was behind what's essentially being actually called a mini budget speech today?
Well, I don't know what exactly the market would want to call it, but let me tell you the idea behind this press conference. In the sentiments in last 2 weeks or 4 weeks was definitely had come off, and people were a little bit worried purely because of the global reason. And as she rightly pointed out, that the global economy is likely to have face recession, and the forecast for the global economy, the GDP forecast for the global economy has come off from 3.7 to 3.2. In fact, some of the reports now suggest that it will be between 2.9 to 3.2%. So that has created a negative sentiments globally, and especially unlike India, other economies are not doing that great, both in emerging economies as well as the developed economies like USA, Germany, and other countries. So some of the concern definitely being felt here as well, and it was the responsibility of the government to address the concern which had been expressed by the market participants to the Honorable Finance Minister. And a lot of discussion around the tax on FPI, a lot of discussion on the loan rate, the interest rate on the loan should get reduced, because the banks are not able to pass. The real interest rate is very high, especially when the inflation is under control. The real interest rate appear to be very high, and this should need to come off, and something which has been addressed, and this will definitely push the demand, because the issue was the liquidity that has been addressed. Issue of liquidity has been addressed. Issue of the demand that has been addressed. The real estate, whatever concern they had, that has been addressed. The other of ease of doing business, some of the problems which are being faced by the industry, that have been addressed. So if you see that the subsequent to the budget, and because of the global impact economy not doing that great, and the India was feeling the heat, so the government needed to address some of the concern which had been expressed, and that has been addressed today. The market appeared to be very happy, because most of the market participants, especially when you talk about linking the loan rate to the MCLR, you also the deepening of the debt bond market, and that will definitely
we'll
create
see
a
how the
benchmark
markets react, Mr. Islam, on Monday morning.
Borrower from the loan market.
But we also have to keep in mind that you spooked them
I don't
by
want
the
to,
mixed signals that you were giving. The government seemed to be giving them, because we had the chief economic advisor who came out and told people, India Inc. and the industry, that don't cry like little babies. You're 30-year-old industry now. Take care of yourself. You don't come running to Papa mujhe bachao, Papa mujhe bachao. Obviously, in the last 2 days, there was a lot of fear and a lot of confusion in the industry of what the government was actually planning to do or not do.
No. Well, he must have said jokingly, but
no, he didn't say jokingly, and I'm sure you're very well aware that it was actually taken very seriously by the industry. But I'll come back to you on that point in just a bit. It's a very important point that I do want to touch upon.
I'm aware of that.
Yes. So, but let me bring in Professor Banerjee as well. Professor Banerjee, you've heard everybody out.
But sometime industry.
Yes, Mr. Islam, I'll come to you in just a bit on that aspect. Let's get an overall view from Professor Banerjee as well. Professor Banerjee, there are many who are saying, well, the steps that have also been announced today are primarily to address the demands or the sulking behavior of the market and the rich people, those who will be impacted by an additional surcharge on long-term capital gains or short-term capital gains, and is not so much that will help fix the problem within the economy. What is your own sense? Should we just at least say that at least it's a good beginning?
Yeah, so I think I agree with many of the others who I think expressed the view that the economy was at risk of falling into a Keynesian tailspin where demand falls and jobs vanish and demand falls more. So I think we are at a point where I think there's a real danger, and I think the fact that there has been an attempt to boost demand is good. I think there are two real issues that the government needs to address. One is this enough? As you're pointing out, that maybe this won't filter through to a very large part of the economy. But I think that's true, but I think that the biggest concern for many of those people is job losses. Parle is cutting 10,000 jobs. That's the kind of thing, and there I think the demand spillovers might help. The other question is, and this is why the budget was interesting, was an attempt to deal with the general fiscal challenge of the economy. None of what's been announced today will help with that. The banks were holding on to cash. The reason they were not cutting interest is that they are actually deeply challenged. And this is a way for them to strengthen their balance sheets. Now that they're going to not strengthen the balance sheets, who's going to strengthen their balance sheets? Who's going to make them compatible to lend? And this idea that we should ignore NPAs, that's going to only make them more stressed. The surcharge on capital gains was another way to balance the budget. So I think there is a fiscal challenge that the government had. It tried to do something about it. This is going to not help with that. Now, I understand the trade-off between the short term and the medium term, but I think to make the markets believe that this is a credible policy, the government needs to think of what's the landing path. How do we go from here, where we already had a large budget deficit? In addition, that budget deficit was based on over-optimistic growth predictions based on the current assessment. Therefore, the situation is actually worse than we thought in April. And given that, what is the landing path of the economy? How do we there are many strategies the government could think of, but I think it is worth assuring the markets that there will be a long-term strategy for dealing with it. Otherwise, the rupee will depreciate. And maybe the rupee should depreciate some, but we have to think about exactly what the right landing path is.
Okay, so in fact, on that aspect, let me go back to Dr. Brinda Jagirdar. Dr. Brinda Jagirdar, at a time when people don't even seem to be buying soaps and biscuits, and that kind of consumption demand has gone down. Obviously, the sentiment is, the consumer sentiment is down right now. Will a move about cheaper loans and cheaper interest rates really help? Or do you think a lot more needs to be done to get the consumption going?
Tanvi, you're absolutely right. I agree. A lot more definitely needs to be done to get consumption going. Now, remember the finance minister announced that this is not the end of it. There will be at least two more big announcements, two policies. Now, one is much needs to be done for the farm sector. To set this right about this consumption slowdown, I think first the rural distress has to be fixed. Once that is done, and the real estate, which is another big hole, once that is also fixed, I think then the whole confidence will come, consumer confidence will come back into the economy. Right now, these are quick fixes. So it will help to put money into the hands of the consumer, to make loans cheaper, to make sure that banks are willing to lend, to make NBFCs start lending money. So at least that pipeline which had got choked, the liquidity pipeline, which had really got choked, that will start to move, and that will really help. And a lot of these are confidence building measures. Now, the finance minister also announced there will be a new organization that will be set up for credit enhancement. That means that NBFCs will be able to lend more to the smaller consumers. So this is a first step. This will definitely help to restore some kind of confidence. But yes, I agree, this is not the end of it. We need a lot more measures. Right now, job losses are also a big worry with the consumers, and new jobs are not being created. So this is not helping consumers to buy, go out and spend. But at the same time, a little bit of money in the hands of people, a little bit of reduction of interest rates, and all the boost in the auto sector will help to some extent. But yes, this is not the end of it. Definitely a lot more needs to be done.
Well, maybe like even Chumantra was mentioning to us that, it's festival time, a little bit of sentiment boosting can also help both in the markets as well as for the consumers and for the industry. Some amount of buying, if that begins, that could probably bring a fillip. Mr. Chaturvedi, I'll come to you in just a bit, but Zafar Islam wanted to respond to that. Go ahead, please.
No. See, as far as the Indian economy, what the message the Honorable Finance Minister has given, the Indian economy is in a very sound footing. unlike the other global economies. And if you see all the parameters, macro parameters, it suggests that the economy is doing exceedingly well compared to the many emerging economies as well as the developed economies. Of course, the sentiment is something which needed to be addressed, and now that the measures which has been taken will definitely boost. There are some more measures to be taken, which has also she has indicated, and the concern which the people, by and large, the market had, that has primarily been addressed today, and there are certain initiatives which she has taken, like credit default swap, linking so that the bond market, if you really want to deepen the bond market, create more liquidity, because people are talking about the credit flow is not there. When you're recapitalizing bank to the extent of 70,000 crore, definitely the bank will leverage it further 7, 8, 9, 10 times. Generally what they do, and you will have a loan credit flow of more than 5 to 7 lakh crore in the market. That will solve all the liquidity issue. Away from that, the deepening of bond market with the credit default swap, which she has also indicated in her press conference, that will definitely deepen the bond market, because you have something, a major mechanism to hedge your exposure, the credit exposure upon all the bond issuance, which earlier was not there. So now it will be a different ball game for the corporate to access the bond market, raise the capital at a very low cost, like all the developed economies, where primarily all the corporate access the bond market, not the loan market. But loan market is primary for the retail segment, and that is something which the government is moving towards that direction, and I'm sure it will have a very positive impact going forward, and the corporates and private corporates will definitely will be able to.
It's interesting that you raise this issue, Mr. Zafar Islam.
In the market.
Yes, and I can understand, what the government is trying to do here, and let's hope it works. But let me also point out that this is coming at a time where EPFO itself, our Employee Provident Fund organization itself, has decided to withhold from investing in private company bonds. So even EPFO is playing safe right now and doesn't want to go to that extent. So the problem is extremely grave and very, very deep.
No,
yes.
So those actually that will get addressed, because then you have the hedging mechanism.
Okay.
So you can take risk, and you will have to pay some amount of premium to buy those to hedge your risk, credit risk, something which you are not able to do today. You can take a BBB rated bond, or even BB plus non-investment grade bond, BB minus bond, and yet you can hedge yourself. There will be costs, but at least you will have to see how much benefit you are accruing by having a better interest rate on BB minus bond, and then what is the premium you are paying to buy the protection.
Okay.
So something which the market will evolve, develop, and all the bond investors who are investing in bond, irrespective whether public sector or private sector, that differentiation will go.
Well,
it is just
yes.
the credit rating which is important. Of course.
Let's hope
some
so.
premium for the government.
But I want to bring the conversation back slightly more to the end consumer, to the maybe the retail investor and the consumer. And Dhirendra, if you could weigh in on this, the point that I was making with Brinda Jagirdar earlier about ensuring and enabling an environment where people get some amount of more money in their hands to spend, and are in a mindset to spend. What more can be done to enable that?
No, actually, not much can be done. They have to just go about building this, announcing things, which is streamlining things, because you need a series of things that will happen. This kind of cyclical downturn is very much part of the economy. This turns out to be severe, and it has happened gradually. Little bit has been done about the market, but if we look at what has happened to the real estate sector, or what has happened to the automobile sector, and something being done about it, I don't think it's a gradual, it is a one-time thing. It did not happen. Nobody knows how it happened, and nobody can be blamed for that. But, it happened gradually. And everybody has his own story. When you look at the pharma story, when you look at the real estate story, or when you look at the automobile story. So this is basically confidence, inspiring and building effort. What tangible thing can be done? We should use it as an opportunity to streamline things which has been messy. Linking loan to repo rate. I think this is a very logical thing, but it will not benefit because we have already seen the big decline, and the decline hasn't happened on their interest rate bill.
Correct.
And the new product will be launched and so on and so forth. The mess of the real estate sector is a Real Estate Regulation Act and many things. The world changed for the builder, and they have to now conduct and realign their life with a changed reality.
Correct.
So, these are things which have happened gradually. Nobody knows, I think, but wind will blow. We'll be back to a lot of things are still very nicely in place in terms of low interest rates, low inflation, and fiscal deficit in control.
Okay, Professor Banerjee, I come to you in just a bit, but Mr. Chaturvedi, do you want to add to that?
When we are talking about sentiments, it is good. We have been talking about real estate sector only thrive on sentiments itself. Today it is a good beginning from our Honorable Finance Minister. It was a good beginning from our state government. The sentiments are changing, true. But this is not sufficient, I'll tell you. We need direct benefits, straight benefits. These are all indirect benefits which will be in long-term process. We are already, our economy is under ventilator. And till you give a direct benefit, nobody is going to come out of it. It will be only on paper and nobody would be benefited. As you very rightly pointed out, the end consumer needs a cash flow in hand, and it can be only provided by providing direct benefits by the government. As very rightly our Prime Minister stated, the wealth creators are to be made happy. They are the persons who make Indian economy in a better part of it. They generate employment. Today, real estate sector, we should accept one thing, they are leaders in the industry. If the real estate sector works, everything will work. Any stimulation only to the automobile sector will not work at all. Ultimately, if the real estate sector starts moving, then only other sector will move. Without real estate sector, nothing is going to move. Let us accept the fact. It has been for years together. Only because of real estate sector, other industries will move. It is a plain cycle in economics
like
today.
Cement,
Cement,
furniture,
steel,
paint,
automobile,
steel.
paint, tiles,
Correct.
plumbing, everything, the wood, everything will move cycle.
True.
So we have to focus on the real estate sector. What we have done today is, we have focused on the automobile sector, which was not required immediately.
Maybe because they made more noise than you guys did this time.
Correct. Our real estate industry, people are little, we accept the fact, we say, okay, let's go on, how much we are facing, but ultimately the end user is going to face it.
Right.
But unless until you hear the end user, we give them direct benefit. Direct benefit can be passed on like reduction in GST. Remove GST for some period, 1 year, 2 years, as a state government has done.
Right.
Remove development cess for 2 years. A beautiful move, I tell you. Similarly, government has to think for real estate sector, remove GST for a year or two, pass on direct benefit to the consumer. Reduce the taxation part of it, increase the rental part of it, give them the rental benefits out of it.
Right.
Fact about direct benefits only will help and give the boost.
Mr. Chaturvedi, I understand where you're coming from, but look at where, it's a very difficult place even for the government to be, because almost everybody wants a tax break, almost everybody wants a surcharge gone, the GST is, reduced, and if the government keeps doing that, then I don't know where they're going to get any money from. They're already running out of money. People want to make...
I'll just come back to it.
Yeah, no, I'll
just come
let
back
me go to 3 or 4 panelists
Yeah.
who've been raising their hand and want to make points. Dhirendra first, and then we'll go across to the other two. Yes, Dhirendra.
No, just hold on, because Nirmala Sitharaman clearly said that next week. She did not say the date. When she has a lot of things she has thought through or thinking through the real estate issues, and she's going to address that. So I think this is a little premature. Today was just part 1 of the 3-part confidence building or announcements or initiatives of the government.
Correct.
And second one is going to be clearly focused on real estate, and I think it is very high on the agenda.
Okay, all right. Professor Banerjee wanted to make a point, and then Zafar Islam can respond to everyone. Yes, Professor.
Yeah, I guess I want to go back to the question you asked and what Brinda Jageda said, which is that I think that if you want a big boost to demand at the ground level, then I think this is probably a kind of a stretch. And you want to directly think of, for example, the purchase prices for agricultural crops. This is one of the places where the government has been very, very strict so far. But that's an easier place to give a boost, and it makes, of course, going to have fiscal implications. But yeah, I mean, I think the real problem is everybody's pessimistic. If everybody's pessimistic, nobody's buying, then there are no jobs, then nobody's buying. So we really need to get a broad-based increase. So I like the idea of passing on the interest rate to not just to the new borrowers, but to everybody else. But again, those things have to come with the banks being willing to lend, and the bank balance sheets are stressed. And I think we sort of have to think of how this whole picture adds up. I feel like this is great to say, as you said, we can all demand subsidies and we can all ask for, tax cuts, but then somehow that has to add up. And if it doesn't add up, then we have to have a clear idea of what we are doing in the short run, what's going to happen in the long run. Are we going to just give up on the 3.5% deficit target? I mean, we should be explicit about it and be clear that this is what's happening this year. We're going to let inflation rip. We're going to print money. Whatever we're going to do, let's be clear so that the markets actually understand where the landing part is.
Okay, so let me ask that to Zafar Islam. Zafar Islam, you're already running a little low on your revenues. Money is not really coming in that easily. Now you've done away with the surcharge as well because everybody was so upset about it. Now you're saying that you're going to accelerate your infra spending. You're also saying that the government is going to get a whole new fleet of cars and get rid of the old cars and go on a buying spree as far as the automobile sector is concerned. Where are you going to get so much money from? Or will this be a year where the government is okay spending a little extra?
Well, as far as our track record in maintaining fiscal discipline is known to you. We have maintained fiscal prudence in last 6 years. We have brought it to at a level where with the government should be feeling comfortable. Unlike UPA government, which at that point in time it was in 5 handle, today it is in 3 handle, closer to actually 2 handle. So the idea of the government is to maintain the fiscal prudence, keep the fiscal deficit low, unnecessary do not borrow, and reduce the expenditure. Like this time we have focused on reducing the revenue expenditure to the extent of 75,000 crore. But away from that, I completely disagree with the professor that the banks are in a stress situation. The bank has been recapitalized. There are enough liquidity available with the bank, and then there are borrowers who have to come up with a new project. Of course, the lending norms will definitely, certainly, it would change, unlike in the past. And if you have done analysis between how the banks were lending, Mr. Professor, you are nodding your head, but I'm giving you some tips for you to do some analysis that will help you to understand the lending pattern of the bank. That between 2006 to 2013, the bank had lent 34 lakh crore. From 1947 to 2006, the bank had lent only 18 lakh crore. So from 18 lakh to 52 lakh crore only between 2006 to 2013. And if you just use the discounting rate which the bank had used and discount with all the projects which have been funded at that time, 67% of the project is giving negative EBITDA. And you as a professor will understand what does negative EBITDA mean? Means there is no earning enough to service those debts. So basically those projects are not making enough money. So that is what the kind of lending you want? Certainly not. It will not affect taxpayers' money. There has to be some reasonableness. Of course, we will give loan to projects with a covenant, with a security which needed to be there, and of course to the project which is feasible. And that is something which is being done, and bank has a free hand. lend those projects which is
that's actually a very, very tight rope to
lending.
walk on, Mr. Zafar Islam,
yes.
because what we are seeing is time and again, and I'm not blaming you or your government, I'm just saying that time and again, banks go out and lend when when economy is down or a sector is not working, and then those loans turn bad, and then, again, the banks have to bear the brunt of it, and then there is external pressure again to start lending to revive the economy. So
see the NPA level of 11.2%, 11.8% NPA.
Correct.
In 2014, we have brought it down.
And so there has to be some breathing space which is also given to the lender before you start, pressurizing them
have
to
enough resources to lend.
Okay, Professor Banerjee wants to respond to you. Go ahead, Professor.
No, we are not pressurizing. We are only suggesting that the project which is worth lending must lend, and they have the free hand. We will
Why wouldn't they if it is worth lending?
Prime Minister office or Finance Minister office or
Okay,
party
Professor
president
Banerjee,
office
okay, Mr. Islam, let him speak. He's on a Skype line. It's not clear if anybody else is talking. We won't be able to hear him. Let's just listen to Professor Banerjee.
I think I don't disagree with anything Mr. Islam said, which is that the bank should be prudent. But the question is, how do you be prudent in a situation where there isn't much demand? You can push loans out, but you are nervous because you've been burnt. So I think that it's going to be, and the fact that the balance sheets of the bank are going to be hurt by the interest pass on is all going to be discouraging. So I'd be very happy if all of this takes off. Don't get me wrong. I don't want to be. I certainly don't want bad things to happen. I think it would be great if it turns out, but it really depends as our interviewer said, that it's walking a very, very, very tight rope. And it could work, but people will have to believe it's going to work for it to work.
Yes. Well, I've completely run out of time, but this has been a great conversation to have on such a big and important day. Let's just leave it at this, that the government has made a start. That here at Mirror for weeks together, even before the budget, we've been talking about how there is a problem within our economy. You can't just brush it off saying it's just one sector or two sector. There is a problem, there is a jobs crisis, there is an economy crisis, and SOS has been going out. The government has made this beginning. They have actually corrected some of the wrongs that were done with their budget announcements, but a lot more needs to be done. If we need to fix this problem, if we need to revive the animal spirit, as a few officials from the government themselves are saying, then a lot more needs to be done. The industry is waiting for those announcements, but at least what has happened today will help boost the sentiment a little bit. That yes, you are willing to move a few steps. You do know there is a problem. You are in conversation with the industry to solve it. Home loans and car loans may get cheaper. Your tax filing process may get simpler. It may actually even be without any kind of harassment if the promise of Nirmala Sitharaman actually gets implemented. So there is a series of reforms that are in the pipeline, on the agenda. Let's hope that all of it actually converts into action and a ground reality very soon. This is just the first part where we discuss and analyze the impact on consumer. On the other side of this break, we're going to debate the impact on the economy in India Inc. So stay with us here on Urban Debate. Thank you for joining us on part number 1.